Make sure the audio is working here. Everything looks good. Again, we'll just go through the risk disclaimer real quick. Please familiarize yourself with the terms. Never trade with money you can't afford to lose. There are potential rewards, but there are also extremely large potential risks. Every effort's been made to accurately represent these products. However, there are no promises or guarantees of earnings. Hypothetical or simulated performance results do have the benefit of hindsight in mind and do not take into account certain market conditions or factors such as lack of liquidity. Any information we talk about today is for educational and research purposes only, is not meant as a solicitation to buy or purchase any instrument, futures, forex, equities, options, etc. We are not certified trading commodity trading advisors. We are not registered, and as such, you should seek professional trading advice, and this is for educational purposes only. It should not be considered specific investment advice. So I want to talk to you briefly about one of the things that I've really spent a lot of time researching, and that is this idea of natural laws affecting markets. So we believe that the markets represent a macrocosm of physiology and psychology. And historically, what I've been able to show you is that we can correlate things that are happening in our environment to how people behave, right? And so the chart on the screen right here is just one example of a natural cause-effect law-based relationship. Essentially, if we count the number of spots on the sun and we overlay when recessions and depressions take place, we see that the highs and lows of these ripples in time tend to be the apex or the decision point for a recession or a depression. And so what I've done with the sunspot indicator and the solar cycles indicator is I've actually gone back about 50 years and I've found the exact low and the exact high of these cycles, and we're able to chart that information here. So what you see on my screen, when we go back into 2008, I have the last sunspot cycle low represented by this green dot right here, and when I move forward, you'll see I have the exact sunspot cycle here represented by this red dot right there, right? And so everything to the right of that is an extension of those two signals. So think of this as a gap in time. And one of the things that I've learned is once you've identified a cause-effect relationship in this gap, you can project that information forwards. And so on here you'll see there are in fact several things going on. Number one, from here to here is 150% of this gap here to the left, and then from here to here is 200% of that gap to the left. Okay, so here's the gap, and that's basically that space in time doubled or 100% of that translated into the future. Once we have those lines, time space is our playground, and we can predict when certain things are going to happen. So remember, the last data point on our chart is this sunspot maximum right here. Now, ordinarily there would be a drop, But you'll see that the banks just continue to push higher and higher. But there was a period here for months where the market just stalled. It ran out of energy, and then it popped out. Now, I won't go into the specifics. I've done this in other videos of how to chop those areas in time up. What I do want you to see is what usually happens when we hit a division line that's negatively charged. Okay? What happens when we hit a division line that's negatively charged? And we have lines that we've already passed through and lines that we're coming up to. And so just to sort of exemplify this, I'll start the original line off as red right there. And you'll see as we come into these times, one of two things happens. There's a stall and or a drop. And if you look at the last drops here, ranging back from 2014 forward, they're anywhere from $150 to $280, $300 in depth. They're pretty big drops when we get to those points in time. Think of these like waves or ripples in a pond that are just emanating forward out. Well, same thing holds true for when we get to the positively charged solar cycle waves in the future. There's a release of positive energy and the market goes in that opposite direction, up. Well, when we come, any one of these gaps, any one of these ripples has sort of micro ripples in it. Smaller waves inside of larger waves of price time. And you'll see that this last gap, I've been pretty busy. Each one of these gaps is about this big, right? And so we had this one, we have this one, and now we're in the current one. So the current one, I want you to see two things. Number one, the last time we were in there, or when we hit one of those green lines, was here. And then we just hit one of those back in July of 2017. Okay. You'll also see that from when we started to where the high of that zone was is right here. And that's important because we're going to come back to that here in a second. We'll go ahead and make that yellow. But we're in this zone, right? Once we're in this zone, I can split it and then split it again into thirds and then the thirds into thirds. And what you get are smaller divisions inside the overall cycle. Okay, some of which we've arrived at and some of which are coming in the future. And I want you to see what we've got going on in here. When we got to the last green cycle, the major green cycle, this one right here, is the major division line. And I'm going to blow this up so you can see it's the primary line. We'll go ahead and boom. There's the primary line. And that's what starts this big cycle off. Well, inside of that primary line were smaller lines or smaller thirds, right? So you have 1, 2, 3, 4, 5, 6, 7, 8, 9. So every third line is one division. Every ninth line is 1/9 of those thirds. And some really interesting things are happening at those decision points. Number one is in relation to what I'm expecting to see next on the ES as we come into the next day or two. Can everybody see there are two places on here where we have a higher high green dot. This arrow right here. As we come into the positively charged area, This is what you in your guidebooks would refer to as a pattern 5. There's one there. There's one here. And there's one here. And what you'll notice is when we come into a pattern 5, there's a drop. When we come into a pattern 5, there's a drop. This last one, no drop. There has been no meaningful retracement in this market since beginning of September. And even then it was more consolidation than a drop. When we come into a pattern 5, this is what we're looking for. We're looking for a buying pressure time at a higher high, or either the candle to the left or the right of it are a higher high. That's pattern 5. It's universal in time across every time frame. And you'll see what happens usually when we get to those points. But the last one, no such creature. There was no substantial retracement. It did not pull back. It blew completely through. When we get to the selling pressure times, you'll notice that the market tends to go into a range. The last of these divisions. And I'll go ahead and make this red so it pops out. What you'll also notice is that I've made the size of the rectangles universal. Each one of these boxes is the same size and width and height as the others. And you'll notice in each one of these cases that the market stays inside of this range. The range of that market, just if we measure, is approximately $23, $24. Well, I want you to see in relation to where the range is here, where we're coming on the ES, up at 25.63 on the 12.17 contract. That's the upper side of that range. As we're coming into this pattern 5 higher high green dot, we're coming into a higher high. Right off the bat, I already know, because of the way the pattern works, that this is beginning to form a pattern 5 today. We're coming into that potential exhaustion area right now on this green line. Okay? So, of the last 1, 2, 3 of those green dots that had a pattern 5, 2 of them fell substantially. So far, so good. Okay. Now, all of that precedes this mamma jamma right here. That big red line at the beginning of November is where we're headed next. That big red line is the end of this green cycle right here. Now, remember when I said, let's take a look at this guy over here, because this was the last one, right? I'm going to copy that yellow rectangle and I'm going to put it here from the open of this exact cycle that we're in right now. We'll go ahead and move this green line over so we can see where that is. The beginning of this last big ripple in time was right here. Okay. Now I'm going to move this right here. And you'll see that we're only halfway through that sucker. Again, the last green cycle started here from November to March, and now this large green cycle started here. It's nowhere near the height of the last push So we're running out of steam. Let me get this thing so the candles are on top of that box. You'll be able to see it better. There we go. Okay, so everybody with me so far? If it followed the last cycle, we should be up at 643. We should be up way higher than we are right now, and we're only 2/3 of the way through it. Okay, I say that because that red line here in another week is up at 643.75. So the 640s area would be a potential area for this thing to drop off if it had even managed to get that high coming into this red line. Now, if we look at the places where there have been drops in the past at those red lines, I want you to see what usually takes place. You see where I'm drawing these arrows? That's what happens when we come up on one of these red lines, when it's not a pattern 4 like this one. When it's a pattern 4, it pulls back and goes the other way. But when it's not a pattern 4, it drops. Can you see that from the red lines here on the chart? That's what we're headed into on this sucker right here. Okay. So I just want you to see that there's no retracement in sight, that this thing is a potential train driving headlong into one of these two walls. Wall number 1 we are at right now, today, tomorrow. Wall number 1 we are at today and tomorrow. Okay, there is no retracement. We are at the highs, which instantly qualifies it to be the distant cousin of this one and this one. So you'll see in each of those cases, we go up, 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 green line, drop. Up, 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 green line, drop. This one, Tim, you'll notice that it goes down, 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 green dot, and then the breakout is a new high. But the candles leading up to it were a pullback. This one, no pullback. Boom, 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 boom. And people are just starting to get in. They're coming in off the sidelines. They were scared, but now they don't want to miss it if it goes all the way up to 2,600. And the banks, I believe, are selling into today and tomorrow. And we should see another one of these drops. If that's the case, the measurement of those drops involve either a $70 drop or a $35 drop, depending on what we see coming into that. But this is what concerns me more. If we get to this red line and we're sort of on track to be in that area, then the drop can be anywhere from $150 to $300 based on that last move. And so these white arrows represent where that drop could take us, as low as 2,300 or as low as 2,443, if what we're expecting to see takes place at these next two divisions. Okay, so I've got that on our daily chart using solar cycle tools. What I also have is a study that I've done with some of the customers who are coming to the Force conference in December. And I won't get into the methodology that I used to devise these lines, but these are examples of force lines on a ES monthly chart. And I want you to see sort of where we were expected to go right around sort of this time. This is last month's contract, but I want you to sort of see a pattern that I was watching before I converted over to the 12/17 contract. There was a time in the past, back in '06, where we had a pattern 5 signal, a green dot at, or price at a buying pressure line, and the market went into a range all the way up, and then halfway through the range dropped down in regards to that price pattern here. So back in 2006, Tim, we had, for better or worse, a buying pressure signal. Go ahead and make that green. And when we came into that line, Tim, it blew right through. At a third of the way through that division, you'll see that there was a drop. And in particular, can everyone see this doji candle right here? Okay. Well, I'm comparing what happened in this zone to what's happening at the next buying pressure zone. And if you do that, there's some really interesting things that start to take place. For example, can everyone see that at the next point here, there's a doji candle just to the right of that division line? So this candle here is identical to what took place over here. In fact, Tim, the width and the height of this candle right there, if I copy and paste it, Leonard, can you see what happens when I put that over here? There are some similarities from pattern on the left to pattern on the right. And what's frightening is that we're coming up into that area, right? We were coming up into that area right around here. So you can see as we get into this time, as we move forward into December of this year, into 2018, what's kind of waiting for us, right? So these prices that we're coming up into are the times that we're waiting for these moves, right? The next line in the division was the drop. This guy over here. So here's our red line. Here's our red line over here. And now we're coming into this green line over here. I'll put that there. I'll put that here. Okay, Tim. So this next point up here is what we're headed into over there. We've already exceeded it. Okay. And the higher we push as we come into this area over here next month, the bigger the drop in the other direction. All right, so just want you to see what we're expecting coming into November, December. That last time we had that moment was when we had this, which is a big pattern 5. Okay, so we're moving towards that right now. So keep that in mind as we look at today. We're coming into a pattern 5 higher high. And then more importantly, as we come into the beginning of November, that's when we're expecting a drop. If it doesn't pull back into November, this is going to be a substantial high in the market. Any questions about that? No? Okay. If you have any questions, just email me, Michael at backtothefuturetrading.com.